host and CEO, Kenny. Let's get back to the portfolio, if you will. I am using the Cash App investing platform. I do want to give a shout out to Taylor Riggs from Bloomberg and CNBC's Sarah Eisen. So let's go and move forward with the video here. Significant update as the portfolio reflects. If you look at my previous video and compare it to this video, you will see that change. The portfolio reflects 69.34. That breaks down to a current cash investment of $66.61 with a $2.73 gain. This video is recorded on Thursday, July 2022, and it reflects the market activities of that particular day and some of the positions that I did switch out of. So let's go and move forward here in the video. The first company in the portfolio is British American Tobacco, and British American Tobacco, with all of the products that they do own under their portfolio, the one in particular that stands out to me is the Newport's brand of cigarettes. When I'm out and about, it is the most highly requested brand, and I'm in a convenience store or supermarket or where I'm at. The Newport's brand is a highly requested brand. Even when I'm out, you see the Newport's carton on the ground, and you can see it's a high seller. And so with that, in British American Tobacco, they own the Newport's brand along with the Campbell's brand and many other brands. In the upper right, there's 308. That breaks down to 303 as a current cash investment with a 5-cent gain. The full share price is $41.36. And hopefully they can parlay into legalized recreational marijuana as well, along with Altria and Philip Morris. Let's move forward. I do have Nike. And for British American Tobacco, I'm only an investor. You either a consumer or you're an investor. For that particular stock, I'm strictly an investor. I don't smoke. I'm not a consumer. However, with Nike, yeah, I am a consumer and an investor here. They do have those Nike Air Griffies that I do like. And in the upper right corner, there's $1.19. That breaks down to the mediocre $1.10 current cash investment with a 9-cent gain. The full share price is $111.69. And those Nike Griffies that I'm talking about are going for $170, if you will. All right. But I do like Nike going forward here. This is a small position at the moment just to get started. I am going to build this position up and out. And yeah, I'm definitely here for Nike. And this video is recorded in July of 2022. And so right now they're going right into the back to school rush. And then after that, that parlays into holiday shopping. Let's stay right into the apparel retail with Ralph Lauren or Ralph Lauren. However you want to pronounce it. In the upper right corner, there's $6.58. That breaks down to a $6.10 current cash investment with a 48-cent gain. Fractional share is owned, and the full share is $98.11. Ralph Lauren did pay a 5-cent dividend on that small position that I do have, so I appreciate that, and I will be investing that 5 cent right back in here. But again, just like with Nike, Ralph Lauren or Ralph Lauren is a iconic company, iconic brand. It has resonated with the new generation of Gen Z and even Gen Alpha, and which is a good thing. And their portfolio, I visited the website, and the website looked real nice and neat and decked out. And I see they got robes and candles and umbrellas and all kind of other things that you can get from Ralph Lauren or Ralph Lauren. And so I am a fan of that. So let's move right along and stay in the apparel retail with Hanes brand. A lot of people may not know, but Hanes brand owns the Champion brand, which has received a surge within the last 2 years, say 2019, 2020, 2021, etc. And the Champion brand, it competes with Polo and Nike and Calvin Klein and Tommy Hilfiger and many other brands out there. In the upper right corner, there's $11.46. Scroll down, $10.50 is my current cash investment with a 96-cent gain. There is shared on one full share, and that share price is $11.38. Let's do a time check here. And so, yeah, with the basics of everyday wear that Hanes brand provide, whether it's boxers, briefs, socks, t-shirts, and for ladies, panties, bras, and sports bras and leggings and things of that nature. And of course, sweatpants, and they also do collegiate apparel as well. So I do like Hanes brand going forward. This is a moment I did get out of the Levi Strauss position that I had. Nothing wrong with Levi Strauss. The dividend is kind of weak compared to what I'm trying to do at the moment. So I did exit out of the Levi Strauss position and just focus on these three apparel brands. Moving right along to Coca-Cola. Coca-Cola is the quote-unquote crown jewel in the portfolio eventually. At the moment, in the upper right corner is $15.62. That breaks down to $15.85 as a current cash investment. And I am down 23 cents in this position at the moment. Fractional position of this is owned, and the full share price is $61.36. And yeah, we definitely got to work on Coca-Cola. It would be nice to see Coca-Cola go after and get and acquire the Red Bull energy drink brand. It would be nice. But let's move along with Western Union. I do like Western Union. There are many other players in the game. You got Affirm that's out there. You got Block or Square. You got PayPal. You got Visa. You got MasterCard. You got Discover. You got American Express, so on and so forth. But what I like about Western Union is their unique position to be able to allow you to send and exchange and transfer money in the most rural, hard to reach countries and places across the globe. They're also iconic for their money orders. I have personally said I would like to see them get into cryptocurrency. That would be something new for Western Union. In the upper right corner, that's $2.05 as a total value. That's $2 current cash invested with a 5-cent gain. Just a fractional piece of this share is on at the moment. The full share price is $16.70. But I do like Western Union, and we'll be building this position out. They do pay a dividend as well. And yeah, I'm definitely here for that as I reconstruct this portfolio to be strictly dividend-based stocks. So with that said, we move right on into the restaurant with none other than McDonald's. In the upper right corner, there's $5.20 as a total value at the moment of this investment. That breaks down to $5.20 with no gain. And the full share price is $253.41. I did get into this position very early, and I'm most likely going to regret that doing a market sell-off. But it is what it is. I wanted to get into McDonald's. I needed an iconic restaurant that I can depend on the dividend. I don't have to worry about a real activist investor coming in and shaking up the place, taking the company private. I don't have to worry about none of that with McDonald's, unlike Wendy's and any other company out there. So I like McDonald's position. They have some of the iconic sandwiches out there that you know that are trademark. Big Macs and Chicken McNuggets, Quarter Pounders, the McRib, Filet-O-Fish. So you know these iconic sandwiches and brands and products. And again, people go to McDonald's for breakfast, lunch, and dinner, and even late night and overnight. If you're leaving the club or hanging out late, McDonald's is a decent spot to go, and it's well received, not only in the United States, but again, across the globe. As we do a time check, we pause for station identification. You're watching the Stock Eye, a clear vision towards portfolio wealth. Moving right along to Goodyear. In my previous videos, I mentioned a lot of things about Goodyear. In the upper right corner is $12.45 as a total value. That breaks down to $11.50 current cash investment with a 95-cent gain. There is one whole share owned, and the full share is $11.82. Now, I'm not going to go in and elaborate on how I feel about Goodyear. You watch my previous videos, you know how I feel about this stock, and that hasn't changed. Let's move right along. Procter and Gamble, which is one of my newest positions in this portfolio. In the upper right corner is $5.10. And that breaks down to $5.08 as a current cash investment with a 2-cent gain. Again, I did hop in this position early. I know I'm going to be kind of furious and pissed a little bit when the market sells off and some of these consumer staple stocks sell off, and I will be down on this position. However, I am in here long term for a solid company that's in the supermarket or Walmart, Target, any supermarket, grocery store. They are there with their products. The dividend is reliable, and so is this company, and that's what I need in this portfolio. The full share price is $140.76 at the moment, and I am definitely here for Procter & Gamble for their iconic products and their history of paying out their dividend. Krispy Kremes, another iconic brand in its own right. In the upper right corner, there's $5.40 as a current total value. That breaks down to $5.05 with a 35-cent gain. Let's do another time check. All right, got plenty of time. And so fractional shares is on at the moment with the full share price of $14.58. In the month of July for 2022, Krispy Kreme is going ex-dividend. What that means, if I want the full dividend, I have to go ahead and buy the remaining fractional shares to receive that full dividend for this month. And that's something that I will try to do for Krispy Kreme's for this month. And he also got an earnings report coming out as well. AT&T, at the immediate time of this video's recording, AT&T did beat their earnings report. They did announce possibility of not having free cash flow as in the back half of the year, and that took the stock down to what it is now. It was down almost 10% today at the time this video's recording. Again, they did beat earnings. They add more users, subscribers to their service and plans. They did raise prices, and for the life of me, I'm hoping AT&T can really turn this around. Again, they did beat earnings. They just got it lower on their free cash flow. And as a dividend investor, that's not what you want to hear. You want a company to generate strong free cash flow to be able to not only sustain the business, but also cover that dividend. My reduced position is $1.20 now. There's a 1-cent gain. I actually had a full share in my last video. I had to restructure this portfolio and let AT&T prove themselves. But we're at $18.93. I got faith in AT&T. I really do. That's why I'm still here. But I'm hoping they can turn the business around and really prove themselves going forward here. And so that's it. There are some key stocks that I do want to add, and that'll be Microsoft is one I want to add. I got a little more time here. Coca-Cola, Euro Pacific Partners is definitely one I want to add in this portfolio real soon. Microsoft is definitely one. Waste Management is definitely another one I want to add. Again, I did have Levi Strauss, Walmart, and I got my eye on that. Yeah, definitely Microsoft, maybe a Home Depot, maybe a Macy's at the time here. But it's definitely get John Deere back in the portfolio here. Caterpillar as well. I did get out of my Dole position that I did have. Genuine Parts, I may want to add eventually. Flower Foods is definitely going to be in this portfolio. But those are some of the stocks that I do want to add. You are watching The Stock Eye, a clear vision towards portfolio wealth. Thanks for watching, and stay tuned for future video updates. This is The Stock Eye, a clear vision towards portfolio wealth. Again, thanks for watching the video, and stay tuned for future updates. I am your host, Kenny.